Welcome, everybody, to the Chinchilla Pickin' Podcast. It is December the 7th, 2021, a day that will live in infamy of the world forever, Pearl Harbor Day. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood. I am here with Brandon Beaver and our special guest, Mark Stanelle. Guys, how are you doing this Pearl Harbor Day?
Awesome. It's terrific Tuesday.
I'm good.
Yep. On Pearl Harbor, I like people to remember what happened. Like America was divided on whether or not to go into.
I'm sorry, Dave. I'm not as old as you. I can't remember that.
I was thinking the same thing.
All right. Well, that's actually a really good one. I like that, Brandon.
Zinga.
Best one yet from Brandon.
Feeling frisky, huh?
Right off the bat, we're lit up here.
I think it's awesome that you remember it because you think about how old that greatest generation is. They're in their, mid-90s now? And they're one of our good friends just recently passed away.
Mark and I had a very good friend who was in the Battle of the Bulge who just passed away, I think about a month ago.
He'd have been 97 this month.
Yep.
Oh, wow. Yes.
Yeah,
he was
great guy.
Awesome.
Great guy.
Yes.
Can't say enough about.
Love the man.
And today's a day to remember that when Pearl Harbor was attacked, America was no longer divided. We all agreed with one accord to enter the war and start helping out. I bring it up just to bring it up, nothing more than that. We don't need to delve in it. Today's about stocks, man. And we're here. We all want to have some fun and make some money, right? I know, guys, don't forget, if you want to see Brandon and I live, we'll be down at the Jingle Bell Run in Northern Kentucky this Saturday, December 11th, participating for Arthritis Foundation. If you're down there and you see Brandon and I wearing our Chinchilla Pickin' t-shirts, come up to us, say you listen to the show, you're a fan of the show, we'll answer questions, help you out, what have you. We will have a small Chinchilla Pickin' team there running in the event as well, so feel free to just run up to Brandon and give him a big old hug if you see him. He will enjoy that tremendously. All right, guys. He has nothing to say. We got Brandon speechless. I think that's the first time we've got him speechless ever.
That's hilarious.
That is nice. I love it. Now I know how to get him quiet.
Give him a hug.
Right. All right, guys. So the rules. How we do the rules on the show is Brandon and I, and now Mark today, we tell each other what we're going to talk about before the show. We do not discuss it. You hear the live discussion here on the show. Today's going to be a little different. I teased this on our Instagram. I say about 2 weeks ago, I teased it that we were going to have Mark on the show and we were going to have him talk about kind of this experiment we did. I don't know what you would call it, Mark. I'll call it an experiment, if you will.
I agree with you. Yeah, I'd say an experiment. Yeah.
Yeah. So let's give some detail to this. This started off. It was meant to be a competition, and then the competition never really fully evolved, and so it turned into this. Brandon and I, and we decided to help Mark and give him stock tips via text messages as best as we could for a 3-month period. So we started in September.
Yes.
September 1st all the way through December 1st. And we started text messaging stocks, when to buy, how much to buy, what to buy, that kind of thing. And we did it daily. So, Mark, let's start with you. Brandon and I do enough talking on the show. Let's start with you, man. How do you think about it? What were some pros, some cons, and what were some results of it? What's some feedback?
Well, we had a lot of really good results. We did 31 trades, and you gentlemen had 26 wins and 5 losses.
And that Brandon, that is horrible. Why do we have 5 losses?
Now the worst one.
That was my call. I will take the heat for that.
A 14%er was Die.
DD,
Die, however you want to pronounce it.
Yep.
But other than that, we recouped that back quickly.
It was like the next week, I think
Within
it was.
the next week, yes.
Yeah, because we had a big gain on something.
We had back on DD, we had 11% gainer. And then not only that, we made 3 trades in between, and we actually gained an extra So we actually, within that 2-week period, came out with 15%. So we came up 1% on it. So that was pretty awesome. But the average looks like to be about 4%
each trade.
Yeah. I mean, you guys had a lot of good ones. We had, the last one today, Riot. We ended up with just over a 2% gain. But really that had nothing to do with you guys. It's more the trading platform that I use, which is Robinhood, which I'm moving everything over to Webull. And this is not a commercial for Webull. So it's just the fact that they let you start trading at 4 a.m.
Yeah.
And end at 8 a.m. at night. And I see a great advantage on it, especially this morning, because we lost an additional, like, just over $100 on that trade. So yeah, I mean, that's a significant amount of money.
Mm-hmm.
You know, so, but other than that, the experience, I mean, it wasn't bad. There's a few times we went back and forth trying to get things, in the correct order. But overall, I thought it went pretty good. I mean,
do you think it would have been smoother if you had Webull?
Well, good question. Yes, because, again, being able to, there was also, I think, maybe 2 or 3 times you had texted, hey, to trade after hours. And it was after 6 o'clock, right at 6, Robinhood wouldn't do it. So yeah, again,
missing out on,
you're missing out. Exactly. So I, you know, that's why I'm trying to move everything over to that. I just figured I'd wait till all this was over with, and then we'll continue and just move over to Webull.
Right. Brandon, you use TD Ameritrade. What do you think of their platform? Do they have that extended hours longer than Robinhood?
It's 7 a.m. most of the time, but if there's earnings or big news, then they'll offer 4 a.m. for that particular security. So
really?
It starts at 7, but you still get to trade till 8 p.m.
Gotcha. So I memean, it sounds like everybody's better than Robinhood. Why is anybody still using Robinhood?
I don't know. You know, Robinhood, they kind of led the charge with retail trading and payment for order flows, but then everybody else picked up on that same trend. Prior to Robinhood, if you guys remember, you used to have to pay for pre-market and after-hours access. But then Robinhood gave you up to 6 o'clock and then, 9 to 9:30 for free. But all of these other companies have moved into that territory. They're doing the same things and they're doing it better.
And I think one other thing, Brandon, is that Robinhood, they'll give me $1,000 instant credit.
Yeah.
And then deduct it from my bank account. So that was the other feature, the first feature that drew me to them.
Yeah.
Where the other platforms don't do that. So, but I think I'm willing to trade that out in order to get those 8 extra hours of trading.
Yeah. Well, TD Ameritrade does give you instant credit now.
Do they? Because I had them before.
Yeah. I think so. If you're going to deposit money, and then usually it's like a 3-day settling, time frame that you have to wait for that money to go in, and you're talking about the instant credit they give you. I think that's what you're talking about, right?
Yeah. So what he's talking about the instant deposit. Like if he just wanted to lower his cost basis and he was already all in, you could do an instant $1,000 in.
So right. I actually did this the other day. I put some money into TD Ameritrade and it was instantly available.
Okay.
So yeah, I remember that. I remember with Scottrade having to wait 3 to 5 business days.
Oh, Scottrade. You're bringing back memories there, buddy. Memories there. Lehman Brothers, no. So yeah, back to this experiment here. Mark, I think we have a good average. Was it like 5% a week? But that was our goal. I don't think we quite hit it. I think we hit it most weeks, not most every week.
Yes, sir. Yeah. Most weeks you'd hit it. The weeks you didn't was 3%. I mean, I'm still happy with 3% a week.
Right.
You know, I'm making money. You know, prefer 5, prefer 10, but hey, 3, think about that. 4 times a month, that's still 12% a month.
Yeah. And like, you know, and I always say, you know, mutual funds and hedge funds will, the best mutual fund out there is going to give you 15% a year.
Maybe.
And if I could teach somebody to do 15% a month on their own, then they don't need a financial institution anymore, and they could just do this on their own and learn how to do this. Mm-hmm. And I really wanted to try and see if we could do this with you, Mark. If we could do this. One of our frustrations is, for me, I'll speak for myself here, is trying to text you. And then I don't know if you got that text or, you replied like an hour later, and I was saying by then, an hour ago. And that was part of the hard part about doing the text messaging. I don't know if there's a workaround for that if you're trying to help someone make money.
Really, I don't think there is. You can email. You can put it on your Instagram account. Well, it's just when you're busy, you're busy.
When you're busy, you're busy. And no one's going to have time.
The type of work that I do,
yeah,
a lot of times my hands, being a tile setter or whatever it is, just a mess, But again, it worked out. We made it work.
Yeah.
I don't think we really, on those delays, lost that much.
Okay.
Or anything at all. There might have been one or two times it didn't work, but, again, guys, 31 trades, 26 wins, 5 losses is not bad.
No, it's over 80%.
Yeah, I'm happy with 80%. I know people in the past I've paid $5,000 for and got a 50%.
And that's what I was going to ask you about next, because I know your past experiences, right? I know that you've paid the $5,000, the $3,000 to join these trading and investment groups and everything. And my question is, how would you compare us to your experience with them? And you can even call them out by name right now if you want to, but how would you compare us to them?
More consistent.
Okay.
More consistent in your wins. And again, you guys aren't trying to hit the home runs. You're believing in the old baseball term of steady base hits.
Yep.
Hey, if we get that one home run, fantastic. That's icing on the cake. But I am happy with the 3 to 5% a week. I see that. Most people may say, "Oh man, that isn't enough." You know what? I had times where I had that 3 to 5% with them, and they still wouldn't put out a sell thing. And then all of a sudden it would tank. Yep. And then, okay, it's hold on. Well, no, you also got to realize when to cut your losses.
Yeah.
But, I prefer not to name any names, but, they did it the same way you guys did. They would text you and they would also email you.
Okay.
But, other than that,
do you think, all right, so here's my next question. Sorry, Brandon. If you have a question, let me know, Brandon. I feel like I'm monopolizing the whole time here.
Yeah, you're fine.
My next question then is, do you feel like you've learned how to trade a little bit on your own now and feel more confident in you making decisions now versus 3 months ago?
Yeah. Oh, yeah. Absolutely.
Do you kind of see what we've
kind of see what you guys, your pattern, your routine, what you're looking for, etc.
Yeah. And to me, Brandon and I, we talked a few days ago and like right before sure we had a couple of minutes while I was waiting for Mark to show up here. But that's always the goal, is not to do the trades for you guys, but to teach you how to trade so that you guys can do this on your own and not be reliant upon somebody. We want people to be independent. We want to teach you how to be financially independent and find these wins on your own. And that's why we go into detail about how I came up with this. And Brandon goes into detail about finding out about that Japanese pension fund that was moving U.S. markets. That was amazing that he found. I bring that up because it was amazing he did that research, but he was sharing it with everybody that this is what I found when I did a little bit of research. Brandon, thoughts?
Yeah, and it's still, the interest rates are still weird right now. But that's mostly because other funds from when they were selling the U.S. Treasuries, the other funds from around the world were picking them up. And so that's why we saw another decrease in interest rates over time, and why we're still below 1.5% right now. Plus, people were a little afraid of this Omicron variant, and they went into treasuries when they shouldn't have, probably, because they were afraid and they were scared the stock market was going to crash. But
And we called it on the show last week. We said it's not, guys. This is going to be very short lived.
Yeah.
That's the term we use, and we said use it as an opportunity to buy valued, strong companies, not just any company. Don't just throw your money out there, but find value, strong companies. But the whole point, Mark, and I think you'll agree, is that, we're trying to show people that this 5% a week is your goal. And if you can make that your goal and you hit that goal, you're going to end up becoming wealthy and financially secure. And most people don't believe us when Brandon and I sit there and tell you we can do it and we can show you how to do it. Mm-hmm. And that's why we really wanted you on the show. Like you're proof that we could do this with other people, and we could show you and teach you how we came up with these things and what we were thinking when we did these things. And hopefully it's gotten you to a good point, Mark. Mm-hmm. What do you think?
Well, there was a reason why they did call me the moronic investor the first time I was on the show. But, yeah, absolutely. I mean, looking at PE ratios and charts, and it helps out. It definitely helps out when you have somebody that can guide you and teach you these things. I mean, and you guys are good teachers. There's no doubt about it. Again, your track record in the past few months has shown. Again, 31 trades, 26 wins and 5 losses. And, the Reds would like to have that record right now, 31 games, right? I mean, again, I've paid more money to people and got way worse results, half that result. And those are professionals. They work on Wall Street.
Quote unquote professionals.
Right. So.
Yeah.
Sometimes I think they're paid to mislead people. So they'll tell you to buy and buy and buy, and then something's diving and losing your money, and they're telling you to hold it. But sometimes I think they're telling you to hold it because they're trying to offload their positions.
Yeah, that's what I feel too as well.
It's a possibility, and then again, maybe this is their other way of making income is getting subscriptions, because they put you into that either yearly subscription or a monthly subscription, so they got that cash flow coming in at all times.
Yeah. One of the first trades that we made was that loss on Didi. And I want to bring that up because a lot of traders, when they get that first loss, or, especially if it's double digits, because that was a pretty big loss at the time for us, they'll go back into their next trade thinking about making up that money or thinking about their last loss. And if you watch the NFL, the great quarterbacks, if they throw an interception, they don't go into the next drive thinking about that past interception. No, that's the past. You move forward. So we didn't let that get us down. I don't think we just moved forward and we made up for it,
Absolutely.
Yeah. But that's going to happen. You're going to have periods of underperformance, and you're going to make a bad trade every once in a while. You just have to move on from it.
And again, it's limiting that loss. Yep. Having a cutoff, sticking to that. If it's 3%, it's 3%. If it's 5%, it's 5%. It's whatever you can handle, and making sure that you stick to that plan. Mm-hmm.
I'm reading his notes here, and he's got some good notes here to say patterns, price, and volume. and I'm like, okay, I like that. I like, because I'm a day trader, and as a day trader, I look at volume. That's key to me because I want to be able to go in and out and have enough buyers and sellers that I can move in and out. So for me, volume is key. Patterns, I do channel stocks a lot, like Cooler.
Mm-hmm.
I get people to channel Cooler all the time. Cooler's definitely a heavy channel stock, but there's other ones that have been there. Riot, you could channel if you follow Bitcoin well enough. You can channel Riot. I wrote an article about it and posted it to the website, guys. How I found Riot and how I was channeling it at that time. At that time, it was between $50 and $60 a share too. So right now, I mean, it's between it's averaging 25, 40, somewhere in that range. So it's even a good channel if you could time it correctly for that one. So I mean, there's a lot of things for day trading that you might be able to do, but I know all in all, I think it was a great experience. I think Brandon and I learned a lot as to what to expect when you're trying to text someone and at certain times of what to trade, how much to trade, what percentage. Cost basis, lowering your cost basis became a term that was in text messages now that it's shows up in my quick phrases. Lower cost basis. But it's about being smart. And I think we were smart and we were safe, and we just had a solid goal of 5% a week, and we tried to hit that.
And like you said, holding some back going in 3 quarters and holding a quarter back to lower dollar cost average, which, on this last one, right, it worked out perfectly. It's what we did.
Right. Yeah. I always think back I always bring this up because it reminds me of a time when I've traded with Mark in the past, and every time it seems like I think of Return of the Jedi. So we're Han Solo and Luke Skywalker. They wake up Han Solo, they bring him before Jabba the Hutt, and like Luke shows up and he's in chains, and Han and Luke look at each other, and Han's like, "How we doing?" Luke says, "Same as always," and he's like, "That bad, huh?" And that's how it is every time I first get into a stock. It seems like it drops right away, but then it ends up doing what I knew it would do eventually, and it moves forward, and I make money. And so you got to be prepared for that drop. You got to be prepared to lower that cost basis and have some money set aside for that. Don't go all in right away. There's a few times I've done that, but I was 100% confident when I told Mark to do that. I was 100%. There was no doubt in my mind. I was right, and it turned out to be all right. So, Brandon, final thought on the experiment and Mark, and anything to take away from this.
Well, a lot of the times when you're picking up a trade, you're picking up, a stock that's, maybe on the short term, it's down a little bit. And you have to remember that support's not a concrete floor. It's more of like a pillow, So you can have those continuous decreases even after it, hits that support level. But if you've got a good catalyst, or if you're reading the charts right, you're going to be correct about it if you know what you're doing 75 to 80% of the time. And what Mark was talking about, limiting those losses. So if you're winning 8 out of 10 times, you just have to make sure that the 2 times you lose, you don't lose all the things you won, all the money that you won. And so if you have that math in your favor where you figured it out, this is the percentage that I want my stop loss at, this is the percentage that I think I'm going to make, and you really, all you have to do is win 6 out of 10 times. And then you're making money in the end. And the better you are at it, the more likely you're going to hit that 3 to 5%. And it just takes experience, and it takes getting some intuition and learning a little bit of basics about charts. You don't have to get crazy about it. Like I see like some crazy chart patterns that really don't exist and people just made up in their mind. Just find, a couple of different, basic chart patterns and basic indicators that all work together and that will match your strategy, and you'll be good. Nice. Really, only need 3 or 4 things that you're looking at. It doesn't have to be super complicated.
Even though I've seen your charts, Brandon, I can't understand them. Having said that, I know, hey,
more complicated than they are. I mean, I'm only using Keltner channels, Bollinger Bands, the RSI, and the MACD. So only 4 things.
So, having said that, I know you have some things you want to go over from today and some picks. And in fact, I think you have a pick for us today.
I do.
So go ahead. Let's transition into that. I think we're done with Mark. Mark, we appreciate the experiment. We hope we've gotten a lot out of it. We know we did. But I want to hear what Brandon's pick is for the day.
So this is mostly based on fundamentals here. And I'm going to buy AIG. And I bought some a little bit in the after hours today. And we can maybe post the chart on this too on the Instagram, because there's some good technical indicators here as well. We were kind of channeling down on AIG for the past week, and we just broke up above that channel. But we can post that chart. I can send it to Dave, and he can put it on the Instagram as well. But this is mostly a play on the fact that I still think interest rates should rise. I mean, every economic theory says that interest rates should rise, and the Federal Reserve is going to raise interest rates sometime next year, so they may lead the charge on this. Mark actually texted us earlier today and was talking about the bank stocks and stuff like that. I think you mentioned Goldman Sachs, which I think is best of breed. And it's kind of you can trade it out between JP Morgan and Goldman Sachs. But a lot of the bank stocks have already priced in the interest rates because people have been expecting it for a long time. But insurance companies that have to keep a lot of cash around, but then they can also put it in cash equivalents to make sure that they get some sort of return out of it. So there's a lot of bond investing, a lot of treasury investing with insurance companies. So when interest rates start to rise, they'll benefit from it. AIG, so we want to look for a value company here, and AIG's PE is around 8. And given the large influx of cash via stimulus, it's normal to see the trailing 12 months PE in these kind of stocks be lower on financials and insurance than the forward PE is. And that's because their earnings for the last 12 months are greatly inflated by the amount of cash that they've received, mostly from stimulus. But the forward PE for AIG is still around 10, so that's still low and it's still in value territory. The price to book ratio here is 0.7. That's below 1, which is, once again, it's in value territory. Earnings here are expected to grow by over 60% in the next 5 years, which is huge. So you can kind of see the disconnect between the low price to earnings ratio of 8 and large expected earnings increase over the next 5 years. Even if you go a conservative route, discount that by 10%, maybe even take it as low as, 54%, which is what it would be if you discount that earnings growth over the next 5 years, 10%, then that would take the earnings growth to 54%. Still big. Earnings have grown over 500% in the last year, where the stock has only gained 37% year to date. Plus, you can pronounce AIG a lot better than I can pronounce Allegheny. Or Allegheny?
You still can't do it. You still can't do it.
So I like AIG better than I do Allegheny here because it's actually a better value play. It's traded down to a lower price to earnings ratio and a lower price to book ratio. I like the expectations, the earnings growing over 60% over the next 5 years. I actually think that if we have normalized interest rates, if the 10-year did wander around to that mid 2.5%, maybe even 3% range in the next 5 years, this stock could actually grow to be a $300 stock. And right now we're trading in the mid 50s. So
yeah,
it's still, and what's very crazy to me right now, the least speculative asset has usually been the 10-year treasury. Right now it's so speculative that it's crazy. So if we may not get there, I don't know. We should. Every economic theory says that we should, but we may not. So we'll see what happens. I'm keeping this. I'm not going all in on AIG here. I'm keeping this as a portion of my portfolio with Berkshire Hathaway to play on interest rates.
Yeah. Okay. I got a couple of questions, and I just want to make this clear for everybody listening. You're saying AIG is going to move up because of the raise in interest rates because AIG has to keep some of its money in cash or quote unquote cash equivalent according to the government, which is a bond.
Yeah.
And because when interest rates go up, the interest rate on the bonds that they pay back to the people who buy them, they get more money. They go up. They typically go up as well. So you're thinking that in an environment where interest rates are going to keep going higher, you should see some more long-term growth in AIG. My question is, like, what type of bonds are they buying, and is there a chance of default on these bonds?
There shouldn't be. There's so many laws and regulations now after the 2008, 2007 housing crash that AIG made its name for, and very negative connotation.
Yeah, the government owned 60% of it at that time.
So now there's so many laws and regulations that should prevent that from happening. To be 100% honest with you, at this moment in time, I have no idea which bonds they actually do own, but seeing that the earnings are expected to grow over 60% in the next 5 years is what sold me on the stock.
Right. I love that earnings. I love the fact that you said the earnings have already grown 500% and it's only moved 40%. That to me is a good buy value opportunity as well. I agree with you on that based on everything you've told us. Yeah, let's go over our calls from last week. We got a little bit of time. Let's go over some calls.
So last week I put out an Omicron Scare Buy List. Procter & Gamble, Disney, Facebook, Meta, whatever, Apple, Netflix, Delta. And I said, if you're going to do this, you want Apple or Netflix. You would do one or the other. And Dave, you actually picked Apple out of this, but you said that, you were going to short it at its, at where it was Tuesday of last week. And here's the crazy thing about this, that we both wound up being right. Because Apple, and this is one of those ways that me and you, we both work, when we put our minds together, Dave,
I'm telling you, we can tell you what a chart's going to do.
Because it did. It traded down the next day, and it filled the gap that you were talking about, and then right back up. These results here that I'm using, because most people are, we put this stock or this podcast out on Monday nights, and it's usually published at 7:30 or 8 o'clock. Tuesday nights, I'm sorry. We put this podcast out on Tuesday nights, and it's usually pushed out about 7:30, 8 o'clock. So a lot of the times that I'm giving calls, I'm basing it on what I see in Tuesday afternoon and what I think you should do Wednesday mornings, right? So we're tracking this from Wednesday morning until today. And P&G was up around 4%. It was trading around its all-time highs. This thing never really dipped. It did a little bit, but this was kind of expected to me. It's a consumer staple, so people need it. People need the Downy. People need the,
toothpaste, toilet paper.
Yeah, the Bounty and all that stuff. They need that stuff. So they're going to go and buy it anyway. So you should be inflation with it. And at the same time, you know, they've got Mr. Clean and all, you know, these are things that people are going to buy off the shelves when they're scared of COVID. The next one here, Apple. This is now up about $7 per share or 4% when I mentioned it on this podcast. It's now trading around its all-time high. Like I said, Dave, you said you were going to short it at that point. You would be right to do so. You would have made money by the next day.
Yeah, and hold on. If you actually listen to that podcast, I'm sorry to talk over you here, but if you actually listen to last week's podcast, I said that, look, yes, right, Apple will go up over time, but right now it's going to come back down from its highs at right now, and it was because it just gapped up too much too quickly. There's always that pullback at that moment in time, and, you know, you always have to know when that happens.
Right. So you can see Dave, the day trader, and me, the swing trader, at work.
Two different styles, but they're successful.
Right.
Disney, I called Disney. That's up about 5.6%. Now, I made 3% on this trade, and I cut it. I still like Disney as a long-term hold, but it really just didn't fit into my portfolio anymore after that. So I got 3% on that, and I got out of it. But 5.6% from Wednesday till today on Disney. Facebook, this is up from $310.57 to $324, or around 4.14%. Netflix this was your least favorite, Dave, and you were right about this. This is essentially flat. It was 617.23. Now it's 622.47 the last time I looked at it.
There's no catalyst to move Netflix right now. I don't see anything. Subscriber growth is the only thing that will move that stock significantly right now, and you only get that at earnings.
Right.
And so I don't see any big news coming out that's going to drive Netflix. It already had its run up from COVID. It's right where it should be at, unless there's news that I'm missing. We've talked about the gaming that Netflix said it was going to come out with. I haven't seen that. I haven't seen that, but you know what I have seen? I have seen ads for Amazon Gaming, and they have a game out on the market.
Right.
You know,
and this was one of the reasons why, too, I sold Disney at 3%. Netflix is the leader in streaming. They're going to be the leader in streaming for a long time, but everybody already knows that, and that's already priced into the stock. So it's not really a reason to buy Netflix right now either, because it's not really at a value at the moment.
Yep.
Delta is up from $3.54 a share to $38. This was a 11.73% gain. Dave, you said this was going to move up within the week. It for sure moved up within the week, and we're right close to about where it was when we had this podcast last week. So you were correct about that. It was down about $33.54 on Wednesday morning. Now it's around $38. Like I said, 11.73% gain. Berkshire Class B, I mentioned this too. This is up from $274 to $92 to around $284 the last time I checked. Around 3.19% gain. Apple and Meta platforms outperformed the technology sector. The technology sector was only up about 0.49% for the week. Disney and Delta outperformed travel, which was actually down around 10%. Procter & Gamble outperformed their consumer staples sector, which was only 1.29% for the week. And all, except for Netflix, outperformed the S&P 500, which was about 2.7% total for the week.
You always got to beat the S&P, man.
Yep. And that's all about, you want to compare your stocks to the sector they're in. You're not going to buy a house without checking the house prices in the area. You should do the same thing with your stocks. So
the comparables,
yep,
exactly. Guys, listen at home. People listening, if you're working out or at work and you just put our podcast on, we're not doing this to boast. We're doing this to show you that we've called these out to you. We let you know about these. These are the ones we've called as picks. We said they were going to be good. They said, or we said they were going to go down. Whatever our opinion was, and we're trying to help you. And hopefully by us explaining why we came to this conclusion or how we came to this conclusion, you guys could come to those conclusions on your own and become wealthy and become financially stable on your own. And that's what we want for everyone.
Yeah. Now, I would cut Delta. If you're 5 to 10% on that, I would cut it for sure. And you could cut any of these stocks at 5 to 10%. But the great thing about the stocks that I mentioned here, minus Delta, a lot of these are also good to hold for the long term too. So if you don't want to sell them, that's fine. But I would definitely cut Delta. I mean, the airlines are just so competitive.
Yeah, and so I know I mentioned to you I wasn't even going to bring it up right now, but you talked about airlines and competitive and the future of airlines. I mean, you alluded to it, right? Mm-hmm. As to their strength. And I talked to you this past weekend how I downloaded the Wheels Up app, and I was looking into that. Why am I looking into these private charter planes apps and the cost of these? And it's because I don't want to deal with the hassle of the airlines. Yeah. I don't want to deal with the hassle of commercial flying, man. If I could sit around and I could make, X amount of dollars every week, stock trading, and you think about what you spend for your family when you guys go and fly off to somewhere, it's usually about 2 to 3 weeks worth of pay, right?
Right.
If I could do that same amount and just charter a plane, why do I want to sit next to somebody I don't know and breathe and deal with all that right. TSA? I could just charter a plane and say, later, guys, I'm going to the airport. When's your flight? Well, they'll leave when I get there because it's my plane.
Yeah. That's awesome.
Yeah. You know what I mean?
Now, with the way the prices are, you can get a flight today from Cincinnati to Orlando for $87 round trip. That's great for us, but it's not very good for the airlines.
It's not good for the airlines, and that's this is what I'm talking about. I want to start looking. I haven't looked a whole lot into private charters, and if there's a way, if any of these are listed as available to purchase, because I believe that private charters is going to pick up. There's going to be more and more people heading that way. They just came out with one. I forget the name of it, because I wasn't going to bring this up, and I don't have any notes written down on this. I'm going all off the top of my head here. But there was a company that just came out about 4 or 5 months ago, and they're on the East Coast. And once you're a member, you could literally book a private charter from, say, Cincinnati to Florida for like just $8,000. It's not much. And people are going to be willing to pay that just so they don't have to deal with airports and other consumers.
Yeah.
And so it's getting cheaper. Private charters are getting cheaper, and that's where I believe I want to start looking to invest some funds in.
You got to see if anybody's got that market cornered.
Right? I always see on CNBC the Bajet, that one guy from Shark Tank. What's his name? Not Mr. Wonderful, but the guy who always sits next to Mr. Wonderful.
It's not Mark. Yeah. It's
Kevin O'Leary.
Yeah.
Oh, I know.
Yeah. Anyways, that guy, he's got his own Bajet, so one flight, and that's his. But no, yeah, I think that's where it's going as far as commercial flights are going to be, like how people look at the bus nowadays.
Mm-hmm.
And so that's where we're going to be headed as a society.
For sure. And then how much money are you going to have to spend on your vacation with groceries going up?
Well, hopefully that's only, like I said, 2 to 3 weeks worth of pay. So hopefully you've listened to Chinchilla Picking and you've traded your money up enough to be successful to have that.
Yeah. I tell you what, inflation's not going away. I mean, Procter & Gamble has announced that their price ups are not going to be incomplete. They're not going to be complete until mid-January. So you're going to continue to see price increases on the groceries when you go grocery shopping. And those prices may not actually hit us until mid-February. I used to work at a company as a sales support guy, and I was in part responsible for implementing price changes and for planning price changes for the store as well. And it can take months. It can take months for these prices to hit the grocery. So I don't think we're actually, I don't think we're through this yet. And I don't think we've even seen the worst of it. When suppliers raise their prices on goods, that can often be months after the prices went up on the suppliers themselves, because the suppliers have contractual obligations with the retailers that they work with. So they have to wait for those contracts to run out before they can raise their prices. So they'll see inflation on durable goods and on like wood and steel and so on. They'll see those prices go up, but then they can't transfer those prices onto the retailers that they work with until their current contracts are up. So then they'll transfer those prices. Then the retailers have to decide whether or not they want to actually pass those price increases down to the consumers also. So this is a process that can take months to play out. And I don't think that we're through this yet. Those Procter & Gamble price changes that are happening, and that won't be complete until mid-January. We won't see those prices probably till mid-February, because by the time it gets to the retailer, then what the retailer has to do, make that decision. Do we want to pass this down to the consumer? Can we afford to do so? Is there too much competition in this sector to where we'll lose out on market share if we raise our prices? Do we want to take the losses, or do we want to pass them down? Then once they decide if they want to pass them down to the consumers or not, then they have to plan it. They have to say, this is how much we're going to raise our prices by. This is the staffing needs that the store is going to have to implement these price changes, so that customers don't go into the store and see a $34.99 price and then get to the cashier and then all of a sudden it's $39.99 instead. There's a lot of planning that has to go into this, and it can take months to do. And then beyond that, if you have a supply constraint, most markdowns happen because you're overstocked. You have more stock than you know what to do with, so you have to mark it down to get it to move, to get it out of the building. But if you have a supply constraint, you're not going to mark things down as much. So we may actually wind up seeing more inflation in January and in February as consumers than we have in the past 6 months.
It's crazy to think about that. The actions that are happening right now won't affect us for another 6 months.
Right.
But I mean, it's the reality. It's the reality of the world we live in, and we'll see it then. And people are still going to be talking about it because it's still going to be hitting them. So definitely something to think about, and think about how to invest in going forward. Maybe we'll talk about that next week.
Yep.
All right, Brandon.
Good company, good balance sheets at good values all the time. Consumer discretionaries right now, they're kind of getting hit. They're way underperforming the rest of the market because people are afraid that consumers won't have enough money to go out and buy consumer discretionaries. So your consumer staples, your quality tech companies that have great gross margins like Apple, those should be safety plays.
Yeah. Apple, I don't know if you can call Apple a safety play. I like it purely because I believe Apple is going to keep expanding and growing in their services. T-Mobile recently just gave me Apple TV for free for a year, so I'm trying it out. I see why people like it. There's some shows on it, movies on it that are kind of cool, but I mean, I see growth in Apple, and that's why I like it. I don't know if I would call it a safety play.
So let me give you a tech safety play. Meta.
Go ahead.
Meta
Google,
platforms.
Amazon.
Meta platforms.
Yeah, well, yes, Meta platforms, yes.
We're looking at something that has a low enough price to earnings ratio and a tech company that has enough cash on hand to where rising interest rates aren't going to hurt their multiples. And it may actually, like if you have a tick up to the 2%, 2.5% on the 10-year rate, that may actually hurt even Apple's multiples. But Apple, at the same time, has $93 billion in free cash flow coming next year. That's crazy.
I know, they could just buy a whole nother company that's worth $50 billion. It's crazy. All right. Yeah, final thoughts, Brandon. Go ahead.
Thanks, Mark, for coming on the show.
Hey, I appreciate your guys' help. It was fun, and it's a good experience. You guys' theory has been proven with consistency,
even when we disagree.
Yeah, those were some good texts at times, had me laughing. But
I got us out of that Nvidia trade when we were day trading Nvidia. And I think we only made like 1% on it or something like that. And Dave was like, don't buy it. And we got out right before it broke down.
And you guys had already bought it, but I didn't see the text message for like an hour. So by the time I saw it, I was like, no, what are you doing? Don't buy it.
Oh my goodness.
It was a good time. Yeah.
Well,
anything you want to say to someone listening who might be thinking if Dave and Brandon can really help them, if this show can help them?
Absolutely. I mean, yeah, you guys can help. Again, it's trying to get somebody into that mindset with you guys. Again, these guys get a barrage of advertisements, hey, make 200% on this and, 100% on this, 1,000%. When, they don't realize those are, man, that's once in a blue moon. Where base hits, as you always say, is the game.
Yep. Yeah.
Just consistent base hits. And again, I think the way most of these companies make money is by advertising to people to get them to join their subscription.
Yep.
Mm-hmm. Again, you guys have performed a lot better, way better. I know you're upset with your
5 losses. I hated the 5 losses,
but no, I'll take that anytime. Absolutely. You guys did a great job, and I appreciate it.
Thank you, Mark. I appreciate you trusting us with your money and us texting you advice for free. By the way, for free, guys. We did not charge Mark at all. We did this all for free. We do everything for free, but I appreciate you trusting us and giving us an opportunity and just to show what we have and bring you on and you talk about what we did, and hopefully someone learns some of this and takes something from this. And that's what we want. We want people to learn, to grow. Mm-hmm. If you want us guys to come to your college, university, or speak with your facility, reach out to us, DM us on Instagram. We'll get back to you. You can email Brandon Beaver at chinchillapicking.com. He always checks that email. And you can just reach out to us, and we will definitely see make that work and somehow get out to you guys and give a talk and explain how to make money, invest in the safe and consistent way. Because if you're consistent over time, 2 to 3 years, you'll hit it and you'll be just fine. You just got to be consistent with it. Brandon, any final thoughts you want to lead us out with?
That's all I got.
All right, guys. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Good night. If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you because they have announced a premium program. It's the Money Vikings MVP premium content. Okay? And I have to tell you this right now. If you are new to the market, you have got to have somebody to mentor you through it. Because 75% of all new market entrants will lose all of their money in the first year. And you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, well, they will give you access to other things such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil and you need to get a paper and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the 1 replaces the I. So go to moneyvikings.com, claim your discount for being a chinchilla picking podcast listener, and conquer your financial freedom.